Hi, I'm Dave Dickens. This is the monthly economic and market update for June 2018. So there are a lot of positives going on right now. Job growth in the United States. In April, we added 160,000 jobs. In May, we added 225,000 jobs. That brings the unemployment rate to 3.8%, which is an 18-year low. That's the lowest it's been since the year 2000. Retail sales are up nicely. Consumer income is up nicely. Consumer confidence is at near records. And GDP growth, which is basically the output for the United States, is expected to be over 3% for the second quarter of 2018 and for the entirety of 2018. That's one of the big goals that the Trump administration had when they first came on, and it looks like at least for 2018 that's going to happen. So are there any negatives out there? Well, there are always negatives. Trade wars and rumors of trade wars. Right now, the Canadians are pretty mad at us. And Mexico and the European Union, they're all pretty mad at us for some proposed tariffs. And of course, well-publicized tariffs on the Chinese as well. So right now, those haven't turned into anything big, but they certainly could, and that's a risk. Another risk is with our Federal Reserve Bank. They're going to announce this afternoon their second of 3 planned interest rate rises for the year. They're also doing some quantitative tightening. And just real quickly, you probably remember the term quantitative easing. That's like for the last 8 or 9 years, the Fed has been buying billions of dollars of securities, Treasury and agency securities, in the open market. Well, about a year ago, they stopped buying those securities. And now, as those securities mature, they're just letting them run off to be purchased by market participants. That's quantitative tightening. So if they do that in the wrong proportion, the concern from the market would be, well, that might cause interest rates to spike more than what is already planned. Then, of course, there's the European Central Bank, who hasn't yet started quantitative tightening, and they haven't yet started raising interest rates. The expectation, even though they're behind the United States in economic growth and in normalizing interest rates, the expectation is they'll begin that in the September-October timeframe of this year. So where are markets? As of May 31st, the Dow Jones Industrial Average was down 1.25% on the year. The S&P 500 was up about 1.25% on the year. But the NASDAQ 100 was up almost 8% on the year. What could possibly make up that big difference? Well, 5 stocks, and you know their names: Apple, Amazon, Google, Microsoft, and Facebook. So those 5 stocks, the NASDAQ 100 is made up of 100 stocks. And it, of course, is up almost 8% year to date. But those 5 stocks make up 46% of that average. Most people think those 5 stocks would make up 5% of that average. But they make up 46% of that average, the NASDAQ 100. They make up over 15% of the S&P 500. The S&P 500 has 500 stocks, but those 5 make up 15% of the average. 3 of those stocks aren't even in the Dow Jones Industrial Average. The 2 that are Apple and Microsoft. So if your average doesn't include Google, Facebook, Amazon, it's understandable why that average would be lagging. So right now, things are pretty positive from a markets standpoint and from an economic standpoint. Are there risks out there? Absolutely. A Federal Reserve Bank mistake, some sort of trade blow-up that actually turns into a trade war, or if interest rates or inflation spike and surprise the markets. But for right now, our expectation is that we had a big pause from February to about today, and we probably have a positive rate environment and a market environment through the rest of the year, unless something on that risk list blows up. So I hope your summer's off to a great start. I hope you enjoy the rest of your June, and we'll see you next month.